Welcome to the Hype Life Podcast Experience, where we teach you what you won't learn in school. From careers to financial literacy, we give you the information you need to bridge your passion with your purpose.
So without further ado, I'd like to introduce tonight's guest for HypeHuddles. This HypeHuddle, we are introducing Damanick Dantes, a Bronx native who had a passion for the stock market since a young age, thanks to the influence of his father. His passion, along with his curiosity for how the world works, led Damanick to pursue a Bachelor of Science in Economics and Finance from Babson College. Damanick has carved out his niche in the finance world as an avid writer, commentator, and trader, covering all things market-related, from commodities to cryptocurrencies. In 2016, Damanick founded Dantes Outlook LLC, an investment company that utilizes technical analysis and global macro to manage portfolios. Damanick Dantes, welcome to HypeHuddles.
Thanks, Will and Natalia. How are you guys doing?
Awesome. Doing awesome.
Great. Yeah, I'm excited to be here. I think this is a great experience, and all the awesome work you guys are doing is really nice, and looking forward to getting involved and for a lively discussion.
We appreciate you being here. We appreciate you taking the time to share your knowledge and share the information that you've learned over the years, and hopefully bridge the gap for some of our student audience and for the young adults who listen in on this recording later on in the future. So, we appreciate you. Just, we connected, and right away I want in, and I know you're doing similar work with your organization. So we'll definitely chat about that. So again, thank you. And we appreciate you. So tell us a little bit about yourself. Tell us what you're up to these days, and maybe you can, enlighten us all.
Yeah, definitely. So my story begins in the Bronx here. I live up in Fieldston by Riverdale, near Van Cortlandt Park, which is huge. It's a great area. I actually grew up by Wakefield. It's a big Caribbean neighborhood in the Bronx. My parents had me at 1920. Dad went to Baruch. Mom studied social work. And, my earliest memory was them at my age, kind of growing up with me. So that was pretty cool. My dad was very into business and finance. He wanted to do management. And, because they had me at such a young age, they sort of imparted a lot of that wisdom onto me. I remember running back home from school and watching CNBC, wanting to learn about companies and how they operate. It was during the dot-com days, so it was really exciting. We had a burst of innovation, and everyone was just trying to figure out computers and how you can connect with the world online. And I was always very global. I remember I was surrounded by maps and globes and things like that. And going online and accessing the world, to me, was sort of my outlet. And I was always reading and things like that. So always very curious. And my mom was a big influence with that as well, with character development and really expanding your curiosity. So with that, the markets was a great way to sort of fill that gap and expose you to something even greater than what you're currently studying or doing. And that to me was amazing. I pursued that and went to Babson College, where I studied economics and finance. It's a small school up near Boston. It's an international school, a lot of international students. And to me, that was a huge attraction. And it was a big focus on entrepreneurship. I knew I didn't want to, be an employee for the rest of my life. I wanted something to own. And, paving that way of getting the really hard curriculum. It's a very tough school. And you learn a lot about, all about business. And to me, that was amazing. And from that, I worked at Fidelity Investments for a while, did some global asset allocation, basically helping portfolio managers understand what's going on around the world and how they can tweak portfolios. And then from that, moved back to New York and started Dantes Outlook. And we've been going strong and helping hedge funds and a few other folks with managing trading portfolios. And then also carving out wealth management. So I'm going to be doing some of that on the side, helping out one of my colleagues who's also a portfolio manager. It's really exciting. I also do some work with CoinDesk, where I'm covering crypto markets throughout the day. So it's really fun there. You're learning a lot, and nothing's ever dull in the markets. So I get global exposure and very busy, but also very productive.
thank you for covering that pretty much almost big snapshot of from the beginning. I know I want to kind of take it back to something you skipped over, which was actually high school, because I know that from our previous conversation, you went to a specialized high school. So before you went off to Babson, can you tell us about your high school experience and how it seemed like you were already predestined for this kind of finance route, and not destined, but almost like you knew yourself so young early on that you kind of in your mind already carved out your path. Is that pretty accurate?
Yeah, I definitely wanted to go into finance and business. Learning how to start a business or learning how businesses work was definitely on the forefront. You don't learn a lot of that in school in general, in the curriculum these days. They're not really focused on those business skills, which I think is very important no matter what you do. You have to learn how to operate. You got to learn how to, know where the money's coming in, where the money's going out, either in personal life or business life. It's survival skills, really. And I think those things, even if you don't want to specialize in it, should always be part of the curriculum. But I wanted to master that and start from high school because I knew that would give me an edge before I went off to college. So Chelsea High School had a good business program, good business track. And back in 2004, when I joined high school, a lot of New York City schools had these specialized tracks. You can go to a school to study math and science, go to a school to study performing arts or business. And the only thing was that the only business school was an hour away and it was down in Manhattan. So I remember I had to get on the 2 train and do like an hour and a half commute back and forth. But, it was a sacrifice and, I learned business there. They had entrepreneurship, marketing, all those courses. That was very, very good. And they also had like a Morgan Stanley mentoring program. So it was a very good school for that,
Yeah. And so I'm curious to know as an 8th grader, you're already eyes focused on this school, this high school. How did you cultivate that, I guess, sense of self-awareness and not allow outside influence? I know you said, well, your family was a positive influence, but sometimes in the adolescent years or teenage years, your group of friends may not always have the same goals and values as you. Did you have a group of friends too outside of your family that were supportive of that, or were you finding yourself where you were kind of doing your own thing and just focused on your own goals?
It's a good question. It started out as doing my own thing, right? Because I was very much centered in the household. I grew up as an only child, so a lot of things, I had to imagination was huge. So I had to imagine a lot of, outlets for me. And going to school, one of the things that I did was to find friends at the lunch tables to start a stock market club. And I remember I used to walk around my composition notebook and track all those .com names. And other students were like, what is he doing? This is so cool, because they see it on TV and they see the excitement. And for that, you always know that you're not alone. And those became my core group of friends. And then other folks started rolling into it. I was always very diplomatic too. I got along with everyone, like from the person that never talked to the one that's always talking. I struck light with them and we'll always have conversations. I'm a very personable person. So I think that helped me a lot, just to interact with different people. And the stock market club to me was awesome because it brought folks from all walks of life. It didn't matter who you were always joining in at the lunch table. And I had that going for like 4 years, I think, all throughout my middle school days. So that to me was a great way to find friends, connect with them, and really talk about the stock market and business and what's going on around the world. It was something bigger than us. And I think that was our drive.
That reminds me of when I was in middle school and we had a stock market class. And I remember everyone being so involved in it because it was a very tangible way of seeing, your own thoughts being exercised and valued, literally.
Yeah.
And it's a great tool for education and learning about a real skill and a real market that affects the whole entire world.
Yeah, exactly. And it's something, you get to experience outside of the classroom. I think the only course that really touched on the markets or business was social studies, maybe outside of math, but social studies. We learned about the historical events, the 30s stock market crash and how Hoover came in. And like that was an interesting period of time. And everyone was realizing like things can actually go bad because of, the structures of society. And really what's behind that is business and how people manage their money. How do you manage greed versus fear and all these things? These are building blocks to the real world, and to learn about how the stock market works and how people participate in companies' profits and losses was exciting, but for a kid to realize that is very hard. But I think it's the foundation. It's where you start. And then from there, you can explore whichever way you want.
Did you feel like your high school that the high school that you went to prepared you for Babson?
In some ways, yes, and in some ways, no. It did have that business program, which I think was great. Was it fully prepared, and did it have all the resources? No. I think the New York City public school system does have a lot of faults in general. If you don't go to like a sort of specialized school like a Stuyvesant or Bronx Science that has that core alumni base, maybe extra resources. So I was limited in that respect, but I had some really good teachers. I think it was freshman, sophomore year was not as strong, but junior, senior year was really strong. And I think that's because teachers really pushed the AP program. My math teacher, Miss Lorenz, and Mr. Biederman was our social studies teacher or history teacher. They really brought in like AP Calc, physics, AP US government and history. Those courses prepared me for college. They really challenged me in a way that I wasn't challenged at all freshman and sophomore year. I'm used to being pushed, and I think the AP courses really helped with that. So in that respect, it did, prepare me at those later years in high school.
And so now the work that you do with Dantes Outlook and CoinDesk, how does that, or do you feel like your education at Babson prepared you for this career?
Yeah, definitely. I had my mind set on going to a good college that had a really strong business program, and I didn't want to wait to have to do an MBA or something like that. I wanted to get it all in undergrad. And it's very tough to find that. Some schools, would push the liberal arts first and then want you to come back to do the business. And Babson, I think, combined it all in one. And that to me was awesome. So it did prepare me. Babson was a very, very tough school. I was waiting to be challenged, and I got challenged, day one at Babson. I remember those long nights studying and group work and case studies and all that stuff was very tough, but much needed. And not only on the academic side, the social side, you're dealing with kids from all around the world. And that to me was, very difficult, but you get to learn those social skills, and that international exposure was really important. And also the group work, your first foundation course at Babson is Foundation for Entrepreneurship or Management and Entrepreneurship. You're given 3K to start a business with a team of like 30 students. And everyone has their specific role. You have the CEO, the VP, the chief marketing officer, chief financial officer, and the sales team. So, within that, you're starting a 2-semester or 1-year business, and you're learning all the ropes, and you fail, and you learn about all those ins and outs, and then you study it. And Babson really rips off the onion, and you learn about the building blocks of business from the accounting side all the way up to the strategy side. So it was a great exposure, and just the international presence to me was amazing. Econ finance was my core track, and within those courses, it definitely gave me an edge in terms of what I do today. I'm able to talk and cover markets all across the world and learn about how businesses operate and bring that know-how from a strategic mindset to the table when I'm making a trade or talking about what's going on around the world. I can definitely see that Babson was a good positive foundation.
I'm sitting here thinking like, I really wish I went to a business school. Like you made it sound like it should be for higher education, for an accredited business school. I studied business at an educational school, and I remember realizing the program wasn't accredited. And yeah, it's just like, that's what you just described, I feel like, is how a business education should learn. You give it, you have money and you run a business,
Yeah.
or so some of the things that you learned, or some of the people you met, do you have any stories from your college years that stand out to you from just overall experience? Obviously, the not the extracurriculars, but maybe some of the the stories with the education in and of itself, the things that stand out to you now and how you use them in your business.
I would say maybe two things. I remember I started the econ track very early. And this was really because I think we talked about this in our pre-session, how I fell in love with econ from AP days. It was sort of, I didn't take AP econ, but I took AP US government and history. And then I think it was when the AP exam was over in June or somewhere around then, my teacher was just like, all right, I'm just going to teach you guys econ. And to me, that was like, whoa, like this is fascinating stuff. So at Babson, I kind of knew I wanted to do that early on. So I remember I was like the youngest student in my macro class. Like you really don't take that until you get to like spring semester of sophomore year or something like that. But to me, that was amazing. So I took that course and I struggled. And I was like, wait a minute, this is supposed to be like my thing. And that was always me. Like the courses that I struggled the most in were the ones I concentrated in, which was like counterintuitive, but like I knew that I had to sort of get that education and really push myself to understand it. And you struggle for a reason sometimes. Maybe it's complex, and because there's so much more to know and there's so much concentration that's required, rather than taking the easy route and doing something that maybe you're not passionate about, but would just get you by. So I challenged myself. I took the macro course, and I was always one of the things I learned was ask for help. Whenever you need the help, ask for it, because people are willing to help you. And professors, thankfully, were really good. Babson had a little econ building, so I used to go in there and really study with my professor and take practice exams or review past exams. And I remember he saw like my excitement, and everyone knew that I had like my blog on the side, which was Dantes Outlook back in those days. And he was like, you know what, Dominic, like interest rates and all these things and these graphs, like there are students who study this, and always the ones that struggle come here to the office and they end up trading these things. And I was like, are you for real? Like, this is crazy. Like you can do Forex and interest rate movements. And that to me just like gave me the burst of momentum to push myself even harder. So that's one example of, just seeking help and then realizing that there's like far more advances or ways you can go with just constantly seeking a challenge. That to me just opens up many doors that you wouldn't think possible, because you're kind of blindsided by the difficulties. So that to me was great. A second example was a trading competition at our Cutler Center in Babson. It's like our finance center. They do different case competitions. They train you in Bloomberg and things like that. That to me was amazing. And I remember one of my professors was saying, we have a trading competition where they're trading crude oil and natural gas. And you can go to like New Orleans if you win, but Babson never did it. It was only like, the larger schools that did it, like University of Toronto and all these other big schools. And I was like, I'll do it. And me, Carlos Trevino, one of my friends, we teamed up and we were just going to trade crude oil and natural gas. So every morning we'd go to the trading office and we would just watch the storage reports at 9 a.m. that came up from the US government. And it was basic supply and demand. If the supply signal, whatever came out lower than expected, the price would go up. And we would just bid the price higher and look at the charts. And we knocked it out of the park. We placed first in risk-adjusted returns on the preliminary rounds, and they were like, all right, Babson was on the map. So they flew us out to New Orleans, and we went to Tulane and competed there. And I remember meeting with like the crude oil schedulers from like ExxonMobil and Shell and Chevron, and how they like play the margins. And this is how crude oil gets delivered. Like that to me was amazing. And I was like, this is what I want to do. So these like competitions and challenging yourself and really pushing yourself outside of the classroom is where it's at. You got to take the opportunities when they come, and it's really up to you. College gives you a curriculum and a standard schedule, but you've really got to make it your own.
I definitely love that. And I think that that's a great segue into my next question, which is, can you describe a little bit now? You said you had a realization like this is what you want to do, in reference to the competition, but more so like the trading aspect. Can you talk a little bit about what you do now, like on a day-to-day, and a little bit about what you specialize in?
Yeah. So Dantes Outlook, we have a core commodity strategy that we manage for one of these hedge fund. It's long or short, which means we can play the upside or downside. We cover commodities across a wide range. So it's, you have your hard commodities and your soft commodities. The hard commodities can include like gas, metal, oil. Your soft commodities can include grains like soybeans, coffee, cocoa, things like that. And, we just cover that. It's mostly technical. So there is a little bit of fundamentals. Like I know what's going on in the macro scene, in general, if people are, sentiment is more risk on versus risk off, or if you're in an inflation environment versus deflationary environment, the former tends to benefit commodities more. So we trade in and out of that. Our strategy is more tactical. So we hold positions maybe for a week or two. So we're kind of in and out. So yeah, we manage that. We also have an equity sleeve. And, during the day, mostly the mornings is when I look at the charts and we figure out what we're going to do, how we're going to change our positions. And with that, I work alongside a colleague, Cedric, who's based in Trinidad. And he's been helping me a lot since Q4 2020. Our performance has done really well. And, we've been managing that sleeve for the hedge fund. And then outside of that, I also do some smaller trading portfolios with clients and just cover the markets. I also have a podcast that comes out monthly. So that's a really good area for me to step outside of the trading desk and interview other people and see what they're thinking and really, grow the network and connections. And then soon I'll be doing more portfolio management hands-on with a wealth manager friend. So that'll be really nice. He's growing his assets under management. He's got a lot of active management strategies that he's deploying, a lot of good client base. So I think that'll be some really, really strong synergies. And I'm really excited about that. I always saw myself moving into the money management role rather than the analyst role. Not to say like the analyst role is bad. It's just that, when you're covering things for so long, you kind of get more antsy to actually put those ideas to work. There's a lot of information out there, a lot of analysts out there, but there are not a lot of good money managers. So you tend to graduate to a level where you can utilize information rather than supply information. And for me, that's the long-term track. During the day, I also cover the crypto markets for CoinDesk. So that's also a full-time job. And, during the morning, I do my technical piece covering like what's going on during the day, what's the price action like. And then towards the end of the day, I have my market wrap, which is just covering, what went on during the day and speaking to different analysts and traders to see how they're positioned. What are the bigger stories out there in terms of the crypto markets, which is very young, but I will talk about later is moving, into sort of the mainstream slowly but surely. A lot of risks, but also a lot of opportunity. And it's a great way to learn about what's going on there.
Yeah, the crypto market is really fascinating to me. I've heard so many different coins, and it's like it's really interesting, and then people were making a lot of money too. So I definitely want to cover that, but I want to back up because you did cover a lot, and I just wanted to see if we can almost reiterate a lot of that, but almost explain it to me like I'm a 5-year-old, because I know you used a lot of terminology that I'm pretty familiar with, but I don't know how much of our listeners will be keen of that, terminology. So in general, I was just wondering if you can kind of give it a really simple overview of like the markets per se, and kind of talk about the different types of markets. Okay. And then how commodities play a role in that market.
Yeah, so I think a good way of explaining it is the business cycle, right? That's at Fidelity, that was like a main core like tenet of how we help portfolio managers understand where asset classes move in a portfolio. So the world operates in accordance to an economic cycle, right? Think of it as a big like bell curve. And on that bell curve, you start at the early cycle phase. It's basically when you get out of a recession, There's a lot of like pent up demand. People want to get back into work. They want to re-stimulate the economy. It's kind of like that soft patch. Think about 2008, right? After 2008, you kind of had the comeback. Similar to now, pre-COVID, after COVID, you kind of have this comeback. And that's the recovery stage. During the recovery stage, in terms of markets, you tend to look towards the companies that would benefit from that. So we call these growth companies, the ones that can experience greater revenue from consumer spending after they've been put out for the recession. So think about your Amazon, right? Your Apple. Where are people going to rush to the stores with their new paycheck in hand to stimulate growth? So we tend to look at that, consumer discretionary, cyclicals, these things that move along with the cycle that would benefit from that early cycle stage. Even banks, right? Banks want to lend more because they see the economy picking up. There's job creation, there's higher pricing power, things are just coming back. So we tend to look at that into a portfolio. This is your stocks. And then after the early cycle, you get like mid-cycle. Things start tapering down a little bit. People get, you reach maybe full employment or something like that. Pricing power is very important to watch. Pricing power is when businesses start raising prices because they think that consumers can handle it. The more money you make, the higher prices you can afford, but only to a certain point. You got to think about there's input prices versus prices offered, right? So input prices are like the cost of goods that a business must take on. So if you're selling, pizza, input prices would be your cheese, all those ingredients and things like that. Those prices are rising as well, and you've got to pass that alongside to the customer. Eventually, the customer demand might get a little bit sticky, and they say, this is a way too high of a price. I'm not earning enough to pay for this. And they would have to raise their prices. And that kind of gets to the mid-cycle point where business then thinks about, okay, demand might not be at this high point. We might need to scale back a little more, which might mean they might have to cut some jobs, right? And think about the entire economy, many businesses that are going through that. That's when you enter a late cycle phase, right? A late cycle phase is when inflation gets too high to where the economy is like, all right, demand can't, stabilize, or this is not sustainable. The Fed, the Federal Reserve, which sets interest rates, and these are, interest rates are basically the rate that you would pay to borrow money, right? Banks pay these, or banks borrow at the Federal Reserve rate and then lend at a higher rate to the economy. It's more complex, but interest rates basically, think about it, the higher they are, the tighter the economy gets. The lower they are, the more easy the economy is, right? Or it's more accommodative for economic growth. The Fed, its tool to sort of balance that is to raise the interest rates. They want to tighten the economy a little bit, not to get too overheated. So that's when you enter the late cycle phase. And in terms of where you want to invest at that time are the businesses that would survive during a downturn. These are your value companies versus your growth companies. So not like the Apple, the Amazon, the consumer ones, the hip ones, the ones with high revenue. You want to focus more towards like the Colgate, right? The things that you would see on the shelf, the things that people would go to in terms of staples, right? These are things that would survive during, it doesn't matter where the economy is going. Also during that time would be commodities, right? Because when you have higher prices and growth and things like that, commodities tend to do well. So you want that in your portfolio. And then after the late cycle hit the recession. And that's when, you want to hunker down and maybe go more into cash. Stocks and stuff like that tend to do a little bit bad. So that's kind of like when you see how asset classes move and how the economy works. And there's different, ways where you can balance and go towards stocks versus commodities and vice versa. But that's kind of like how you think about in terms of managing portfolios around the economy.
So when you say things like soybeans, right? For example, how does one invest in soybeans, and what does that look like in the process of putting my money into the market and getting shares of soybeans? Is there a company that is responsible for the soybeans? Like, what does that mean?
Yeah. So there's many different ways. What we do is in the futures market. So the futures market are basically contracts for these commodities, right? So think about a farmer who's, farming and making all these soybeans or whatever. He or she would create a futures contract to kind of level out the price, right? The price that they expect to see in the future. If it's higher, they want to lock that in a contract. And that's basically what they do. And then investors or speculators would come in and make a bet on where that price is going. So they would buy a futures contract to say, I'm going to buy crude oil at X dollar at some date into the future. And there's more nuances to that, but that's basically like your direct exposure to the commodity. You can get that other ways, right? There are companies like, you can do ConocoPhillips or ExxonMobil. These are exploration and production companies that go out there and actually drill and get that oil. So that, their share price would move just like the price of oil. The price of oil is rising. People expect Exxon to make more money by selling that oil to the market at a higher price. That increases their revenue, increases their bottom line. So you can do that. You can buy, companies that create these commodities. You can also buy the manufacturers, right? There's like John Deere, which sells like the tractors or whatever that people use, the farmers use to go and farm these materials, farm these foods. There's a lot of that. You just move down the supply chain. You can see the different companies. There's also ETFs, so exchange traded funds or exchange traded products that hold a basket of stocks according to a particular industry. So there is like XLE, which is your energy ETF that would hold like Exxon and all the other oil drillers. And an investor would get exposure to that sector by investing in that ETF. And an ETF has pros and cons, right? The pros is that you're not exposed to a single stock risk. So if Exxon has some hiccups, you have the other stocks that can sort of offset that instead of just going to Exxon directly. So that's another avenue that you can use, or another vehicle you can use.
Who puts together these ETFs, and can you buy fractional shares of them, or they trade like stocks?
Yeah, they trade like stocks, and I think you can buy fractional shares on them. The creators of these ETFs are institutions. They can be like S&P, I think, or Spiders. State Street owns Spiders, which creates a lot of these ETFs. Vanek is another one. iShares, those are the providers of that. They basically create indexes. And these indices manage the weightings of different companies in this ETF based on different rules. And that's just the way to get exposure. They're also lower cost than like a mutual fund. You have a lot of different mutual funds out there, but a mutual fund is not as easily traded on the market like an ETF. ETF trades just like a stock.
Yeah, there's a lot of other fees associated with mutual funds and all of those different nuances, right? Like these hidden fees. I've done a little bit of research on the mutual fund versus, the ETF, and Tony Robbins, one of his books, he talks a lot about that.
Yeah. I mean, mutual funds are fine. There are some ones that do well. They're actively managed. They tend to be actively managed, which means that they can change the weightings accordingly. They can go overweight than a benchmark. Like a lot of them, if you're following like the S&P 500, it's a standard benchmark, and you have a mutual fund that overweights the companies in that benchmark to get outperformance, that can sometimes justify the fee. And on a downside, when the market's selling off, these active managers tend to outperform because they have more flexibility to move in and out of stocks. They can capture more of the upside on a downside, if that makes sense. Whereas an ETF tends to be very passive. They follow the index. Whatever the index is weighting, they'll follow that. There are some actively managed ETFs and some ETFs that go short. So you have a wide range of options when it comes to finding the right product.
And so back to your company, Dantes Outlook. So you guys actively trade other people's portfolios and manage their stocks, but you're focusing on commodities, or is it a wide range of the different markets?
It's a wide range, and we focus on the commodities. That's where we're strongest. With the hedge fund, we've been doing a lot of that work. Eventually, I want to scale it into something where it's more of like a family office, because we operate as a boutique. We only have a few clients, and eventually we'll have like our own account where we trade that. And then in that way, I can focus my time more on the portfolio management side with my wealth management partner, where we're going to be doing soon. So I think that will be my area where I focus on managing other people's money, as opposed to managing my own money and close friends and close colleagues. So Dantes Outlook is more of a private office where we just manage, close connections. And the hedge fund, we're not managing money. It's more of a strategy that we're working with them on. They have, a lot of their different portfolios and funds. They're on the front lines deploying capital. And we're more of the, not signal provider, but sort of strategy provider. We come in, we show how we're going along and short different commodities. We have a macro view. So we work hand in hand in that respect. And it's a great way for me to kind of translate, sort of the bottom up and also the top down. The bottom up meaning you're looking at different commodities based on their trading performance. And then the top down comes from the macro side. So I have this broad view about inflation, world, and all this stuff that kind of directs me where to look. And then when I have that direction, I can go and see what's tradable, what's not tradable, where we're going to go long, where we're going to go short. It's more of a tactical execution.
Do you feel like at this point in your professional career and expertise that you have it down to a science?
No, no, there's so much more to learn. And, that's where I'm always, like I said, it's a real challenge. Trading and markets and investing is not easy at all. You have your down days, but it took a while for me to develop my process, right? And I think my process is very consistent now. I'm very disciplined. I know when things go crazy. I know when things were really good, and I manage my risk accordingly. So we're very conscious of that. Is there room to improve? Of course, and I think that comes with more data, right? The more you trade, the more data you get. You get to learn your style. Eventually, maybe interns will help out with that. There's a lot of quantitative work that I would love to do. So yeah, there's a lot going forward, and the investment world is large. It's a global world. So I see myself doing a lot more advanced stuff and consistently learning how I behave and perform and how the market performs, and trying to put those two together to make return. At the end of the day, it's all about your profit and loss. And there's a lot of variables that go into that.
You mentioned intern, and if that's something, we could definitely chat about that, because we can probably help facilitate that at some point with some students of ours in the future.
Yeah. The more busy I get, the more help I need. So.
Yeah, that's a good thing.
Yeah.
I have one question, and then I'm going to pass it over to Natalia, who has some questions for you, or maybe one question and that. My question is regarded to the crypto markets, and I was wondering if you can just kind of, again, it almost as if you're explaining it to like a fifth grader, right? Like, or a 5-year-old. I forget the expression, but like, can you explain cryptocurrency in that world now that we're heading or we're in?
Yeah, it's complex, right? But let me see.
How much time you got?
Yeah. So there's a blockchain technology. It just creates this ledger, right? Think about it as something where you're recording transactions, right?
Like an Excel sheet.
Like an Excel sheet, exactly. You've got inputs, you've got outputs, it records what everybody's doing. It's just a much easier way. You would think that the world operates that way, and it doesn't. There's a lot of inefficiencies. There's a lot of middlemen and all that stuff. And the blockchain just basically organizes things in a much tighter way and transparent. Everybody can see it. Now, the byproduct of that are cryptocurrencies. And the way that it works is that you have these miners, right, that crack the code, basically. If they're trying to confirm every transaction that happens on that blockchain. And a way to do that is they have to go through all these different computations. And whoever gets that computation right gets awarded a Bitcoin. And that Bitcoin, if it rises in value, they can then redeem that and they get paid. And it's kind of an incentive to keep the network going. It's also keeping the network secure. It's also keeping the network well run and efficient. So the more miners you have solving these codes and keeping the blockchain running, the more potential it is for a higher reward in terms of redeeming their Bitcoin. And other cryptocurrencies work in a similar way. So it's kind of, it's like reaching a consensus on solving these different puzzles. And the cryptocurrency can be traded, right? And people can have different fractional ownership over a Bitcoin. And then that's where you kind of have the speculative aspect of it, right? That's kind of keeping the value up or down. And in terms of the use case for it, that's still undecided, right? It's, I think the original thought was it for, well, not the original thought, or one of the thoughts was it for it to be like a payment mechanism. But, you know, given its high volatility, it's very tough to get an accurate price. Like one day Bitcoin could be at X dollar and the next day it's at X plus whatever, as opposed to a regular dollar where it's very easy just to transact. Also, the network is not as fast as like the current payment network that we have now. So that's still to be seen. Some people see it also as a store of value, something where they can just grow wealth over time. But you also have to think that that has to also be converted back to legal tender, which is the dollar, which is recognized by everyone. So there's a lot to be seen. And I think the technology has a lot of promise. There's about like 9,000 different cryptocurrencies out there, and they'll probably all compete with Bitcoin and others. So it's really just, you know, a great experiment, really. Similar to like the 90s when you had the internet, you had all these different companies. You had Napster and LimeWire and AOL, and somebody survives, somebody gets something really efficient and brings it to the mainstream where everybody uses, it's widely acceptable. And I think that's where you get, you know, the payout if you're an early share owner in that. There's a lot more to go into, but that's basically how it's working. And it's an exciting new market.
Yeah, thank you for covering that, because I think you did explain it in a way that I haven't heard someone explain it in before. So I appreciate that. I thank you for that. But I know Natalia has some questions that she wants to ask you. So I'm going to let Natalia jump in.
Hey, so I mean, firstly, definitely just want to say thank you, Damanick, because I feel like you're shedding the light on the creative side of finance. I think a lot of people think finance is just like this endless wall of numbers where as you show like day to day, you have to have these problem solving skills, but also this creativity of thinking outside of the box to decide what are these like determining factors to whatever portfolio you're dealing with in the moment.
Yeah.
I'm interested to know about the difference between the jobs that you've had. Like, what were some of the benefits and shortcomings of the experiences, like both through, I guess, the role in the organization? So, like, why maybe you chose to work there, and then why maybe you decided to pivot to your next role.
Again, like job is very much similar to school, where I was always looking for a challenge, right? Or something different or unique. You know, my earliest jobs weren't finance related per se, right? They were more media driven. So my first internship was at AOL, and it was in their newsroom, and I was covering finance there, but it was more a lot of writing and covering, you know, what's going on around the world. And it's really teaching you about journalism, being curious, asking questions, but also being very numbers driven too, because you really got to get to the heart of the truth. To me, that was also very creative, right? I also worked at Greater Than One, this pharma marketing company. So a lot of that was a lot of pivoting to via internships. My first job was at Forecast. It was only a few months. They were running out of money, so laid off. And you know, you kind of learn the hard way with that. Saxo Bank was great, and I was covering FX there. So I think a lot of my previous jobs, you know, they all kind of are all encompassing, right? They kind of balance that creative side and also the quantitative side. And it allowed me to find my voice. Every job I had, I was very outspoken. People came to me for figuring out what's going on. And I also interacted with a lot of people around the world. And it was just a natural curiosity. It reminded me of like my stock market club on steroids, right? It's kind of like, that's what I wanted to do. And I felt empowered. I was given that ownership and that sort of autonomy to take control and create something new. At Fidelity, they had, I used to manage our art book, which is asset allocation research team. We had this like big book that I created every quarter. And it's basically running around the world, asking analysts what they're seeing, what they're thinking, gathering all the data and the charts and putting it together in this quarterly publication. And before I joined, it was like this huge Bible. And my manager was like, no, please don't do that. Like slim it down. And she was like, she gave me total control. So I was, you know, I reinvented the whole thing. And I think it was amazing, right? And that gave me like that sense of being an entrepreneur, right? It's an entrepreneur that operates inside of a company, and you're really placing your brand. And people will never forget that. People will never forget you. So that enabled me to create my own brand with the resources of a large company. Some of the downfalls, I think, with, shifting jobs and all of that, or some of the hurdles that I had to go through, just operating in like a team. You realize that people sometimes have different motives, right? And a lot of that can come from age discrepancy, right? You're not entering an organization with a lot of people that are coming from your background or your age set. And a lot of times within finance, it tends to be very, you have your interns in your new class, but they end up being scattered about. So you can be like the youngest one in your department, and you're working with like upper-aged economists, and that can be, very offsetting sometimes. Maybe, there's a threat factor, or there's like a job security factor that people are defending. There's a lot of politics that goes on, and it can get very dirty, and that's reality. You learn that, corporate world is very political, and I don't got the time for that. So there's a lot of that goes on. Thankfully at Dantes Outlook, we're very small and nimble. I work with clients who are awesome. I develop great relationships with them. It's a boutique, and I'm able to grow like that by finding who I want to work with. And I think that is the most sustainable business model that you can ever have. You don't have that choice a lot of times within companies. So, it's the path that I chose to take. And, I think a lot of those skills that my mom taught me when I was young, those behavioral skills, those respects, wanting to reciprocate your respect. I'm a very nice person. So, but those things really get challenged in the outside world. And it's very frank, but I think a lot of people experience that. And the good thing is that it pushes you, to figure out what works best for me. We never know what's best for us, but you kind of have an idea, and you learn it the hard way. So that's kind of what I learned throughout my journey.
Thank you for sharing. That's definitely amazing. Like, so many gems in there. I like that. It's important to never forget who you are. I think that's something a lot of people forget when they're in such a strong culture like that.
Because there's a lot of people who want to tell you who you are, but they have no idea. Yeah. So, and it's corporate stuff, but like I said, corporate sometimes is a necessity, right? You've got to go through that. I can't imagine like starting Dantes Outlook or being where I am without that. Like, I couldn't just get out of college and go straight into starting my own business or anything like that, because you don't learn those life skills or those people skills by just being in your own bubble. You've got to work under somebody else before you get to that point. And it takes time, energy, effort, a lot of those things. And there's it's not a race, right? You'll get to that point eventually.
That was my one question.
That's how I was like, she has question mark. I know you have an activity prepared, and I was wondering if you could run us through that.
Okay. Yeah, I think it was opportunity cost. So, the first thing I learned in econ was outweighing the costs and the benefits. The opportunity cost is basically the cost of not choosing the best path, right? It's something that will reward you the most, and you chose alternate B, right? So it's kind of difference in the value. And this is something I learned from my mentee recently, deciding on whether or not I was going to do another track or choose something else, right? And I confided in him, like, we talked about how mentorship is a two-way track, right? And I was asking him, like, what's your advice? Like, how would you navigate this situation? And he told me like the most wisest thing. He's like, you need to create a pros and cons list, Dominic, and outweigh. And I was like, what? But from a 19-year-old, and I was like, that's actually very smart. It took me back to my roots, and I did that. I created a pro and con list. So I think that's a cool activity. Whether you're trying to decide a major or what college you're going to go to, a career choice, or what you're going to do tomorrow, just divide it down the center and create a pro and con list. And for each pro, you give it a value, right? Maybe 1 through 10. And for each con, you do the same thing, but you're going to add and subtract from that list. And at the end, you sum up the pro list and the con list. And whichever one, or you sum up the list of one decision versus the next, whichever one outweighs the other one should be the choice for you. All right. And that's kind of what I did. And that helps me a lot. And you're also putting stuff down on paper as opposed to having them bounce around your head and creating all types of anxiety. It's a good way to organize your decision making. And it's very important when you're investing. That's all I do during the day is weigh out pros and cons, whether you're going to pick this stock or this commodity versus the other one. Is this one more set for the long term, or is this one more set for the short term? And, in hindsight, it all looks pretty interesting, but when you're at that table, there's a lot to be, decided upon. So that's a cool technique.
So I know you mentioned opportunity cost. So essentially the opportunity cost would be the cost of you pursuing the option B that has the less reasons why you should go with it.
Yeah, exactly. So if you chose, I don't know, like to go to one school versus the other, and you kind of went against the overriding one on the value factor, right? Whatever the difference was is basically your opportunity cost, right?
So let's run an example. Okay, I'll play the student, right? Should I go to college, or should I take a year off and work until I'm not sure what I want to do. I'm not 100% sure. I want to go to a university. It's $30,000 a year. I'd have to take student loans. I'd have to get myself into some debt, or I can, take a year off or maybe 2 years and work a little bit, save up some money. Mm-hmm. So these are my two options.
Yeah. So you would weigh those options, right? Like the financial strains, of course, everybody deals with that, but give that a value, a 1 through 10, how much does that matter to you? Maybe it's a minus, 5 or something like that. All right.
So taking out a loan, you mean, would be the -5?
Yep. Like how does that, in terms of the value to you, how much would that take away? And you just weight it, 1 through 10 on a scale of 1 through 10, 10 being the highest, 1 being the lowest. Maybe you'll take out a -5. It's kind of a half the way burden. And then another burden could be, I don't know, the time, right? 4 years sometimes for a lot of people is a lot. That's something that can be a negative factor. Another one could be moving, right? The cost of moving and all that stuff could be a negative factor. And then you just list, the other ones that you can, foresee as potential problems.
What about like fear? Like just the fear alone, right? Like the fear of me going to school and then getting a degree in something that I don't end up wanting to do as a career.
Yeah. So you would value that based on, how important that is to you, right? Some people, the fear, they're like, I can get through that, right? For some people, it matters more. So they want to weight that a little bit higher on that scale. And then you would have the pros, right? Some people are like, all right, I'm going to actually gain an education that's going to last me for a long time. Some people, that's very important for them, right? So they might put that as like a 7. Some people are like, I can probably learn that on the street, right? By just doing something on my own. So maybe that's a +2. And then you go through the other pros. College sometimes gives you structure as opposed to an unstructured environment. You can also say I have a higher earnings potential, right? Historically, people who go to college earn a bit more than people who don't. You're also gaining a skill set, Another thing could actually be moving away. Some people might weigh that more than staying at home, For me, right, it was getting that business program, and that to me was like a 9. Like I definitely wanted that. For some people, that whatever program that they want can only be offered probably through college. Like say you wanted to go to a doctor, you have to go to college, right? There's no doubt about that. But maybe you want to venture off into something similar. I don't know, right? You want to weigh out the pros and cons. Now, the interesting part is, right, and when you go and you tally down, you're basically taking a sum of all the plus and the minuses, right? Like say you had going to college was like a 9 versus not going to college was like a 6 or whatever, or a 20 versus 10 or something like that. Obviously, it's telling you to go for the highest one. That's not always the case, right? Sometimes you might want to go for the lesser one based on how well you can mitigate the negative factors of the other one, right? And I think that's interesting. So take all the negatives on the opposite one and think about the ways you can offset that by going with the lesser valued option. And sometimes you'll think like, oh, that's pretty easy. Like I can actually probably stay at home instead of going on campus. I can actually, take online courses instead of paying this large sum tuition, or go to a state college as opposed to like there are so many alternatives and options that you
Right.
can weigh. Yeah. So that to me helps me kind of like balance that out a little bit more and realize that the quote unquote best choice is not always the best choice based on the power of mitigating factors.
Yeah, that's a very it's a very simple but
Yeah.
often like unlooked at, like you said when you mentioned it, like, oh, so simple. Like,
Yeah.
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 Like
It-
write it down on paper too is very helpful too, to visually see it.
yeah. And then it's also very personal, right? Like you're weighing these things based on what you feel is important to you,
Mhm.
not anything else. It's not distracted by outside influences. It's you, that pen and that paper, and how you feel.
Mhm.
And then you're quantifying that. You're putting a value to what's important to you. And at the end of the day, it's your judgment call, right? And like I said earlier, like we don't know what's best for us, right? These are multiple pathways that you can take. It's all based on how you stay true to yourself and how nimble you are to like be resilient through any downfalls or anything like that. Like there's a lot of management that's involved in a decision. Making the decision is not the end all be all. Like anybody can say, I'm gonna go to college. Anybody can pass an SAT or whatever. But going through with it and making the best of it, it's a much harder, thing to do than making the decision.
Mm.
So you got to put in the work.
Well said. And it reminds me of what you said earlier too. It's what you make of it, like the college experience. I remember that resonated with me because it's true, you're handed a schedule and you can go through the motions. You can go to class and then, take your time off and do the things that you could do at home, or you can go and take advantage of the institution that you're paying a lot of money to be a part of. And, or if you're lucky enough to have scholarships, but you're in that space, so you might as well take advantage of that, that wisdom that you're surrounded by. Because when you get out of college too, and the workforce is not the same as being in college. Like,
Yeah.
it's like, it hits a little bit harder, it's less forgiving, like you said, the politics. Yeah.
Yeah, it's politics and all that stuff. I think like the most saddest part was like graduation day. Like to me, that was like, I gotta leave the bubble. Like,
Yes,
no one ever told me this. And it's just like that fear, or that, not the fear, but like, I don't know, it's the weird transition. And I'm sure like the high school students who are probably listening to this are going to feel that way. Less so the high school graduation, but more so the college graduation. It's kind of like the end, right? But there's a whole world out there and you'll go through a lot, but it's fascinating. It's really cool because then you get to take the wheel. Everyone's giving you all this stuff and you've studied a lot, you've tried a lot, but now it's really up to you to take that full force. And some people that's exhilarating, to some people that's like super fearful, but it's a challenge. You got to stay challenged and stay focused.
Yeah, that's an exciting part of the chapter. And, hopefully the next time we have you on too, we'd love to have you on again too, that we'll be able to chat with some students and have them, really pick your brain, because I know you have a lot to share and a lot to guide young people. And, we really want to be able to provide that platform for them and for you as well. But we have final 5 questions that we ask all of our guests before we wrap up. So Natalia is going to ask you our final 5.
Awesome.
All right, Damanick. Our first question is, if you could speak to your high school self today, what is one piece of advice you would give yourself?
Yeah, you'll fall down, but you'll get right back up.
Our second question is, what is your favorite business-related book?
I was going to say 0 to 1, but I don't think it's my favorite. It's just my most recent. But actually my favorite, going back to like high school days, the one that really got me, like my wheels turning, was I think it's either Rich Dad, Poor Dad. It's Robert Kiyosaki's book, or like The Guide to Investing, one of those. That to me, just like, it really changes your mindset of thinking like an entrepreneur, thinking how you can invest and all that stuff. And knowing that the employment track is not the only track, like it just broadens your horizons. And he does it through storytelling of showing like how his rich dad thought versus his quote unquote poor dad, and that mentality. That to me was awesome.
Our third question is, what is a common trait that you notice in those people who succeed in your field, so within finance or business?
Yeah, optimism, right? If you're an investor, you're always looking at the upside, but always conscious of the downside. But you've got to learn how to sort of self-correct and focus on how you can make things work out for the better. The negative ones don't really survive well, or are in it for the politics.
What are some of your hobbies?
I love tennis and biking when I have the chance and where the weather is nice. I live near Van Cortlandt Park, which is huge, and it's great for all the outdoor stuff. So I love staying active, staying fit, and staying healthy so I can survive.
Goals. Lastly, our question for you is, what gets you hyped?
Music. Big fan of music. Anything with a good beat. I grew up listening to a lot of 90s like grunge, which is very like Red Hot Chili Peppers and Dave Matthews Band and all that stuff. So it's a good vibe. And the Caribbean influence is really awesome. So a lot of reggae and hip hop infusions, all of that stuff. It's a wide eclectic mix, but that always gets me hyped.
Awesome. Thank you for answering our final 5, Damanick.
Definitely.
And that's it for our HypeHuddle. We want to, really again extend our deepest appreciation for you, Damanick, for coming on and sharing your wisdom. How can any of our audience members or students reach you if they have any questions? Is that something they can do? They can find you online anywhere?
Yeah, DantesOutlook.com, DANTES. My email is Dominic@DantesOutlook.com. Outside of that, I'm active on LinkedIn. So you can just look me up on LinkedIn and, I'll reply to your messages and happy to interact. And if you're looking for an internship.
Awesome. What type of interns are you looking for? Like what type of roles in the near future?
Yeah, probably more, honest, like administrative hurdles are a lot to deal with. But alongside that, it's teaching people my style, my trading style, more about the markets, if interested in business, finance. I think working alongside someone like me and my colleagues who do a lot of the trading stuff, I think seeing how we put all of that work into action is really fascinating. And I'm always teaching. I'm always explaining things and walking through different processes. So I think an internship to gain that level of understanding is really cool. And if you know about commodities and stuff, even better. So I would love to meet a fellow soybean enthusiast.
I almost feel like I want to intern with you. Like yeah, we could definitely help you facilitate that. Maybe, put out a post or something, but, we also, want to let you go too. I know we kept you a little long, but, this is our last HypeHuddle for the school year, the fiscal year. So we appreciate you helping us close things up and wrap it up until September when we're going to pick back up again. So we definitely would love to get you on the schedule for next school year. And we have a month designated to specifically finance. So we think it would be great to have you back. We'll share those dates with you after this, but we want to let you go. So thank you. And appreciate you.
Yeah, thanks a lot. I look forward to keeping in touch. And it's an honor to be here. I think you guys are awesome. You're doing some really cool stuff. And keep it going.
Thanks for tuning in to this episode of the Hype Light Podcast Experience. If you like this episode, be sure to rate, review, and subscribe so you don't miss out on the latest episodes.